viewers and Wealth Institute family members, for the many years that I worked in the trenches on Wall Street, on the trading floors, there's a type of dialect. There is a nomenclature that is used that describes how we would communicate with one another on the trading floors and also across the tickers. And that information is often coded. There's information that is coded in that nomenclature. And so what I want to do now is go over something that you won't hear anywhere else, but it will allow you to look at the markets, okay, in a different way. Now, first of all, you must understand and understand something. And I say this all the time to our Wealth Institute family members. There is no such thing as the stock market. Okay? Now let's make that abundantly clear right now. There's no such thing as the stock market. There is, however, something known as a market of stocks. And that's two different things now. There's a market of stocks, but there's not a stock market. Now, while markets may rise or fall, there's always individual positions, okay, which equals the market of stocks. That is always either up, where you can monetize it with calls, or buying the position straight up, or going down, which you can monetize still with puts, or shorting the position. So when you know how to look at the market as a market of stocks as opposed to a stock market, then you're well on your way to obtaining and maintaining your economic liberation by getting P.A.I.D. from what? The market of stocks. Now, the strong push up in the markets has everything to do with the market narrative. Write that word down. Write that phrase down, market narrative, which I'm about to explain to you. That's a particular term that we use on the trading floor. We would say, what's the market narrative for today? Or what's the market narrative been for the past week? What's the market narrative thought to be for this upcoming quarter? Now, the strong push up in the markets has everything to do with the market narrative. That's the overreaching theme that is the most prevalent driver of the long-term stock price trend. Let me repeat that now. The definition of the market narrative is the overreaching theme that is the most prevalent driver of the long-term stock price trend. Now, I monitor market narratives for one reason and one reason only. That's to get P.A.I.D. You see, if you have a clear understanding of the market narrative, okay, then you, me, we, the ASK THE WIZ Wealth Institute family can continue to make money off of the market narrative and get P.A.I.D. prolifically. Since early November 2016, the Trump growth narrative has been the prevailing market driver. Now, there are three legs of this growth narrative, okay? And they are still around, and they have been since the original discussions about Donald Trump being a front runner in the presidential race. They are, write these down, because they're all monetizable. Number one, reduce taxes. Number two, regulatory reform. And number three, infrastructure spending. Let me repeat those three now. The three legs of Donald Trump's growth narrative are reduce taxes, regulatory reform, and infrastructure spending. Okay? Now, right now, the most important driver out of these three is the recent passed tax reform. Now, the effects of the tax reform have not truly been fully priced into the markets. And here's why. Listen to me. The most basic fundamental analysis of a stock's value would be that the current price should reflect the net present value of all future cash flows produced by the company. Now, given that definition, when cash flow has a steep change, in this instance, an increase as a result of reduced tax expenses, the stock price must, over time, increase to take into account all of the future tax benefits. And until companies start reporting actual earnings under the new tax regime, we won't know all the nuances of the tax benefits. Now, because of this uncertainty, the market has not yet fully been able to price in or discount the effects of reduced tax expenses. So what should you, me, we, the ASK THE WIZ Wealth Institute family and listeners alike, what do we have? What can we do to monetize that? So now, let's look at the 3 areas of the tax reform that will have the biggest impact on stock prices. Number 1, companies with most or all of their tax revenue coming from the United States, they're going to benefit handily from the tax reform. Number 2, companies that require large capital expenditures will benefit heftily from the tax reform. And number 3, companies with large cash hoards overseas, aka Apple, will benefit heavily from the new tax reform. So now let's look at these individually, and then let's focus in on some companies that will get P.A.I.D from everything I'm presenting to you. Now, let's look at high percentage of tax revenue from the United States first. Now, this one is pretty straightforward. Once you realize that companies by and large get taxed for their sales in the country where the sales are made, then corporate tax rates haven't changed significantly in other countries, but they sure have here in the United States. Now, since the tax reform only reflects sales that happen in the U.S., countries who get most of all or all of their revenues outside this country stand to benefit the most because of the drop of the tax rate from 35% to 21%. Okay? Now, I was surprised to find 292 stocks out of the largest 1,000 U.S. stocks have all or almost all of their revenue coming purely from the United States. Now, here are 3 that I'll be looking to actualize as they pull back, because as the tax reform takes traction, these companies are going to benefit. In no particular order, Anthem, symbol ANTM. Now, Anthem is a healthcare stock that provides medical products and managed care plans for employee pools of all sizes. Anthem, symbol ANTM. Anthem, symbol ANTM. Next, a super regional bank, Citizens Financial Group, symbol CFG. CFG. And thirdly, Steel Dynamics, symbol STLD. This company manufactures steel products and has a large ferrous metal recycling business. Now, this business will be helped not only by the tax reform, but also by the potential of large infrastructure spending. Company, once again, Steel Dynamics, symbol STLD. Now, these are 3 companies that are definitely going to benefit from a high percentage of tax revenues that they generate right here in the United States. Next, I want to bring your attention to companies that are going to benefit from capital spending. Okay? Now, how a company gets to expense the cost of property, from real estate to equipment to even software, has always been a complex accounting issue. In somewhat of an oversimplification, if you put in a new piece of manufactured equipment with an IRS proposed 20-year lifespan, you could only write that expenditure off in equal increments over the 20-year time frame. Now, with the generous early expensing provision of the new tax reform, companies would benefit from being able to write down the expenses associated with that piece of equipment or whatever, okay, earlier. Now, a couple of companies that are going to benefit from this as a result of the new tax reform will be a company known as Air Lease Corporation, trades under the symbol AL. Air Lease Corporation trades under the symbol AL. Now, Air Lease Corporation buys and then leases commercial aircraft, and they're going to definitely benefit as a result of them being able to expense, okay, these particular assets that they're buying and then releasing out. Another company that's going to benefit is Southwest Airlines, symbol LUV. Southwest Airlines, symbol LUV. Now, as you know, Southwest Airlines is an airline with most of its revenue coming from domestic flights. Not international flights, domestic flights. And the third company that's going to benefit heavily from this is AutoNation, symbol AN. And AutoNation is the country's largest car dealer network. AutoNation, symbol AN. And we also have a couple of other companies that are going to benefit from this expensing provision of the new tax reform. JB Hunt Transportation Services, symbol JBHT. CSX Corporation, symbol CSX. And these companies both are in transportation, okay? These companies will be able, once again, to take extreme advantage of the expensing provision of the new tax reform. Next up, family, as we see now with others see eventually, let's talk about companies that are going to be bringing capital back to the United States now, since the new tax reform is in place. You see, companies with large overseas businesses won't benefit as much from the domestic tax breaks, but those that have managed to accumulate cash overseas, now they get a chance to repatriate that cash at a reduced rate from 8% to 15.5%. Now, the companies would then be able to return that money to shareholders through dividends or share buybacks, or better yet, invest the low tax rate capital in business growth opportunities. Now, while we know Apple has the single largest overseas cash hoard, there are other companies that have as much of a percentage of market cap, okay? And I'd like to give you three that are going to benefit as they bring cash back here to the United States. NetApp, symbol NTAP. NetApp. Family, NetApp has a whopping 36% of its market cap overseas, while Apple has 25% of its market cap stores as overseas money. NetApp, symbol NTAP. Cisco Systems, symbol CSCO, is a maker of plumbing for the internet. And the only company with a higher percentage of cash relative to market cap than NetApp stored overseas at 37% is Cisco. Now, this solid long-term earner is a buy on every pullback that occurs. The next company I want to give you is Waters Company, symbol WAT. Now, Waters Company or Corporation is a healthcare lab equipment and software maker with 17% of its market cap tucked away as cash overseas. A strong business model makes this an attractive position on any pullback to consider for possible inclusion into our portfolios. You see, family members, the market narrative is a powerful, powerful tool to keep you, me, we, the ASK THE WIZ Wealth Institute family and listeners alike, to keep us heading in the right direction. And with a strong market mover in tax reform, we have the opportunity to profit on positions as they realize the benefits of this growth-oriented tax plan, and thus get you, me, we, the ASK THE WIZ Wealth Institute family, P.A.I.D.